Okay, final update for the day. Today is the 15th of September, the weekly expiry. And to be honest, quite mixed feelings about this expiry. Overall, I would think that there are some things that I did that I'm very happy with, some things that I did which I'm not very happy with. My view of which index to trade would be better definitely went wrong, but that's unavoidable. That is perfectly fine. But there are certain things about trading these current markets that I'm sort of recontemplating. So first of all, how did the day go? I initially was trading Bank Nifty. I was under the opinion that Nifty opening around 18,000 will be a complete pain to trade and will scale up the Bank Nifty size. So I started by trading about 8,000 shares of Bank Nifty, and that didn't go so well because the triangle that was initially priced at 40 due to the IV spike in Bank Nifty, and I'll get into that, went all the way up to 80. I booked 26 points of loss on about 8,000 shares, and Nifty, I recouped some of that after I was done with Bank Nifty. I also entered a small size Nifty trade about 9,000 shares in the morning, but then I scaled it up to 20,000 once I exited Bank Nifty. So let me go over first of all where the day went wrong. I had initially entered by shorting two options which are 30, 30. So 30 rupees, I shorted two options. Now if you take, this was the initial call option that I shorted, 40,100. Now if you see what happened in the first two candles, right? First two candles. So this is where it opens and this is where the high is made in the second candle. I entered this around 30 bucks. So from 30 bucks in the first two candles itself, it has shot up. I of course have exited this here, but even the further up calls that I've entered, they also continued to expand. So right off the bat into this big up move, took quite a bit of hit because if you see, my calls had to be moved from 40 to 100 to 200 to 300 to 400 to 500 to 700, and the logic is the algo I've programmed for today in such a way that each time it gains by 10 points, you move and then switch back. And in the meantime, the put options on the put side, they're all being moved up as well. So the highest put that I moved to was 14,300. Now this is going to be interesting. If you see at the low point, it went down to about 40 bucks, 45. So I entered this somewhere around 45, and once again I got out around 60. But basically from this low, it has gone and made a high of 260. So we had a complete whipsaw move on the Bank Nifty right off the bat, where option premiums itself re-rated and the straddle gained by close to 100 points. So because of rising IV, you were not getting any compensation. You had this particular up move where the calls gained, the puts didn't lose much, and then this particular down move where puts absolutely exploded. So I cut my trade at 25 points. Had I let it run, it would have gone into negative. So I cut around 25, 26, right? It would have gone to negative 70. And finally, this period, it would have all gone to zero and would have made a great profit. But basically around here, when I was willing to risk about 25 points on Bank Nifty, when that got hit, decided okay, no further, and I completely killed all my trades. So I closed off the Nifty position, which was in about a point of profit at that time. Nifty wasn't bad at all. Into the morning IV spike, I mean, it was okay. It was bad, but it was nowhere close to as bad as Bank Nifty. Bank Nifty was a different kind of monster. So I'm kind of happy that I booked it at 25, didn't let it keep running. But at the same time, after that, I think I should have, and this is what I'm contemplating, when IV kept spiking from my exit, I should have considered a re-entry. What ended up happening instead is I got really frustrated and said, okay, leave, I'm done for the day. I don't want to. At that point, my mark to market was exactly minus 1.95 because Nifty trade had made a little bit and this had lost about 2,10,000. And then I decided, okay, leave it. I'm going to completely take on no risk and take a penny trade. And you can see I'm not shifted my positions at all. I entered a penny trade which was 17.6 and 18.2 for about 7.5 bucks. I said I'll keep a final 2-point stop loss on this. If it hits, I'll be closing around minus 5 and be done with it. And this was at a point where IV had really shot up. Now, after this, there were multiple opportunities to get closer, possibly, but I just didn't. So that's what I'm thinking. Lately, my style is kind of like if I take a big hit in the first half, then my risk appetite in the second half, it virtually becomes zero, and there is no yeah, so there is not much risk that I'm able to take in the second half, because first half itself I'm taking some amount of damage, and this is happening more often than not, where the first half on an expiry is going to be completely filled with IV spiking, and then second half it completely cools off. So I'm working on maybe if I should spread my risk across time and do it that way, or keep a larger risk appetite, slightly larger risk appetite overall. Either way, it seems to be a balance between opportunity cost and potentially flattening whatever market has to be gained. So quite a bit of contemplation on that side pending, but I don't know. The second half, I think maybe this is hindsight 2020, but second half I feel like there was fairly like a good chance to take some risk. Like for example, when we were trading at 17,950 is when I entered this for 4.5. I could have easily been closer at 18,150, at least 100. At different points I could have moved up my puts. I didn't do any of that, so I kind of gave up. In one way, many times giving up has served me well whenever I've reached a certain mark-to-market threshold, but at least after it cooled off by a little bit, I could have considered. So that's about it. I'm just going on a rant at this point. I hope you had a good expiry. I think if you dodged the first half, then the second half should have been fairly all right. I think if I just stuck to Nifty also, that would have been fine. But there also, there's nothing that can be said. My view was that Bank Nifty being around 41,500, right? I can short above 42k and I can short below 41k. I thought this would be a better trade to do than something which is around 18k, which will be a pain, because when we go above 18k, call side IV will spike. When we go below 18k, put side IV will spike. So that was the analogy, and that's fine. Analogies can go wrong, so I don't particularly mind that. I hope you had a good trading day. I'll catch you at the next one. Take care. Bye-bye.